Hello, everybody. Rambo here. Long time. Let's get into it. I'm just doing a quick video on KHC. Found some stuff on a scanner that I really liked, and it looks good, really good for options. So that's why I'm kind of doing this because I think there's a good easy 60% in here. If you play your cards right, and a chance for 350% if you play your cards right, and it does what it needs to do. With that said, let's get into it. If you notice these light aqua lines here, they are in conjunction with the ones on my volatility trading range indicator. It sets up a divergence, so that's what I'm looking for. If the price is going up, the trading range, the buyers are in the options are not supporting that move. That's a divergence. Okay, so price is going up, support's going down. That's a bullish move, and if you look, boom, it hits to the downside. Um, if it let's see, there we go. Okay, I'll take care of that real quick. Sorry about that, guys. Uh, Here's another divergence right there. And with that divergence right there, comes down. Divergence here, price goes down. Divergence here, divergence there, price goes down. Divergence is the price going down, and support is going up. That's bullish divergence, and look at that move. Okay, so KHC follows divergences very well. That's one thing that you want to see. Okay, and here's a big divergence right here. Okay, price is going up, support's going down. All right, now you have a support coming up right here. You have a ascending wedge, so that means eventually, okay, it's going to break 78% time. It's going to go down, so that is something else that gives me confidence that's going to go down. You have an ascending wedge, and then you have the divergence pattern happening right here. So that means it's going to happen when, okay, well, or if. So here's the divergence pattern. If this week it breaks above, okay, then the move's over. Now, I'm trying to give you guys all the scenarios. So I'm trying to hurry up because last time I did this, I didn't have volume, and it took 40 minutes for this to complete with 8 minutes. So I'm trying to shorten it up here so I can get it out. Um, or it could come up and hit the divergence one more time in a day or two, and then go down. Okay. Um, or Monday, it could just break down right here, fulfilling the trading range here, divergence, where it's starting to come up, and then it could just start coming down like this, which would get the move down here. Okay, those are the things that I'm looking at. So it's either going to bust up. It could come back down, hit support, bust up one more time. But boy, that's 1, 2, 3, 4. That'd be 5 times it tests. It usually breaks after the third or the fourth time. So that's why I think it's kind of urgent here. Okay. Now remember, this is the daily chart though. So each candle takes a day. So guess what? If it comes down here and then comes back up, that might take 3 days. So we're into Thursday already. And then Friday it might start to break down, and then next week's going to be the move down to what I believe is 39, which is just the first target. But that's my idea. Okay. So we're either going to up, down, break down, up, down, or break up, break the pattern, and then it's going to continue up. That's what I'm looking at. It did go over the previous high over here. So, yep, we could be continuing up. But this divergence pattern, it's gone its way every single time. So I'm pretty confident that we're just about at the support. We can break down here and then break down. And so now what do we do with that information? Okay, so I'm looking, and this is why I like this. Trading wise, more conservative would be the 13th. It gives you more time. Okay, so on the 30th right now, the 39s are 17 cents for the 13th. I'm sorry. If it makes just a dollar move, 39 to 40. So this is gives you an idea. So 16 cents to, or I'm sorry, 17 cents to 37 cents. That's a 60% jump off of a dollar move. Okay, that's the conservative, and that's if it goes from right here right away and comes down. Obviously, if it comes back up and retests that, that 16 cents is going to be worth 5 cents, right, or whatever. And then if it starts to come down, then that's money. And then when it breaks the downtrend, then I would add even more because we're on our way down. Okay, so that's what I'm looking at as my plan. That's one plan. Another one, you get in right here, betting that it breaks down. That's the next one. Okay, the most conservative is waiting for it to come back up here, retest, start to come down, and there's your stop loss, right? A really small stop loss, and you got a big reward. This is just a really good play. Okay, now the more riskier move is the January 6th. Okay, January 6th here, uh, the 39s are 4 cents. And a dollar move goes up to 18 cents. People, that's 350%, okay, off of a dollar move. Oh, wow, rather do that. Well, again, here's the thing. That's for this Friday. And what did I say? Here's the divergence pattern. This thing could bounce back up, take its time, come back down here, and come up like that. If that happens, that 4 cents is going to be worth a penny, and this might be by Friday. Or it might start coming down on Friday, and you get out at 2 cents and you lose 50%. So, see, there's the risk. All right? That has to happen. If that happens, you're out. Okay? Best thing, or the worst, that'd be the worst case scenario. The second would be it could have a big day Monday, but stay below this, and then it breaks out, and then maybe you could add in more there and then this would have to come down quick. Okay, if that happens, that's your three. Well, that wouldn't be probably 350%, but it'd be awfully high. Um, or the really risky one is you get in here. It's risky overall, but you could set a stop loss right above that candle, and if that breaks, then you're golden. Okay, because most likely it's going to come down to 39 cents. And boy, if it does that by Tuesday, the average trading range is 64 cents. So in theory, it could do that late Monday or Tuesday, and you'd be making your 350%. And that's the best play. And then if you're really gambling, you could hold to see if it comes down farther, and that's why I get into Y39. 39 has a lot of support right here. Okay, so this is my play. That's it. If I have 10 contracts, I'll probably get 7 out and let 3 come down just to see if we, get to not even that 37 right here. Yeah, 37. That's a lot to ask by this Friday. But for next Friday, following Friday the 13th, plan's still the same. Comes down here. I'm gonna probably watch and see, and if there's any kind of movement up, I'm probably out. But if it comes down and retests and breaks down below, then I'll probably add more to my position here on the way down to maybe 37. okay, and maximize that trade out. But I'm definitely taking a lot off the table at 39 because there's just too much support here. Um, but with that said, I know in my haste, I left out a lot that I had on the first video, but I wanted to try to get that out. But those are pretty much the scenarios that I have is maybe get in a little bit here right away, but a small amount, see if it retests and then breaks down. Um, or the reason why I'd get in a little bit right away for the January 6th is to play that breakdown, but have a tight stop loss. The January 13th, again, I still might get in a little bit here off the beginning because if that scenario holds, then you're already in it also. And if not, you just hold and then average down here when it gets to the top and have a stop loss right above that divergence pattern resistance, because if it breaks and you get stopped out. But if it breaks down, you got in at a great price as it breaks down to the 39s. With that said, guys, sorry about that. And have a good week. We'll see you tomorrow.